Hey guys, welcome back to the next video. In this one, we are going to be learning about supply and demand zones and how to identify the big players in the market. So in the last lesson, we learned about how the market is extremely liquid, how there's $6 trillion worth of money being traded every single day. And again, we went over how this is in part by the large institutions that are making the moves, and how this works to our advantage because you can identify what is happening here. So the thing is, when big money enters the market, they cannot hide the order that they just placed, because no matter what, if the banks want to make money, they have to place huge orders, and those orders leave impressions on the market that they can't hide from us, because when they place the order, it moves price. So we can see the price action that is left behind from them entering orders. And if you remember, our goal is to be trading with the banks, not against the banks. So if we know the overall direction that they're trying to push the market, we can have a pretty safe bet on what direction we need to be trading. So what this looks like and how to find this is engulfing candles. And if you remember back, an engulfing candle is one that totally covers up the previous candle with its sheer size and volume. So just to give you an example here on the chart, we've got a zone that we could mark up right here, because this, you can see, is an engulfing candle. I'll circle it for you. This is an engulfing candle, okay? And we've got another zone up here. This is an engulfing candle right here as well, since it's so big, okay? So we find the engulfing candle, and then we find the candle that got engulfed, okay? So here's what it's going to look like. So step one, find the engulfing candle. And step two is to draw a zone around the candle that got engulfed, not around the engulfing candle. Okay? So, to show you what that looks like in real time, here's how you do it. So we found the engulfing candle here for this upper zone. Let me move this out of the way real fast. So here's the engulfing candle. Now we need to look for the candle that got engulfed. So in this case, the candle that got engulfed is this one right here, because it's the one directly previous to the engulfing candle. So what we do is we draw a box around it, and then we pull it over. Okay? And a cool little trick for you so that you don't have to, pull price over too far. Double click your rectangle, go to coordinates, and just make it, you can make it bigger that way, instead of having to constantly, click and drag it over, just because that can be tedious. Okay? So now we've got it going all the way across the chart. And you can see in the past, just from our analysis right there, without looking in the past, you can see how well respected this zone is. You can see going all the way back to here, 1, 2, 3 major moves happened out of this zone. And again, one happened out over here as well. Okay? And now we have a zone on the bottom side too. So we look for the engulfing candle, and then look for the candle that got engulfed. So it would be this candle in this instance. So we take our rectangle tool, we draw it around that candle, We use our little shortcut here and extend the zones. And there we have it. So now we've got a supply zone right here where we expect price to sell out of, and a demand zone over here where we expect price to buy out of. So you can see if you would have had this zone marked up on your chart just like this and price came to here, you would have known to look for a sell in this zone. And vice versa, if you would have had this zone marked up here, you would have been known to looking for a buy when price got down into these areas. So what do we do when price gets to a zone? So when price enters a zone, price will often bounce around to confuse investors into getting into the wrong direction of the trade, or to just simply lose patience and move on to another pair and miss the big move that's setting up. If they miss the move, the banks might get a little FOMO money from them as well. They might enter late and get caught on one of the pullbacks or something. So what a zone represents for us, it's an area in which to pay special attention to reversal patterns, candles, and price action. And in the next lesson, you'll learn more about the specifics of those. So in general, price will make what seems like a reversal pattern all the time. But if they don't happen in a major supply or demand zone created by big money, just ignore them, because they're manipulating people to counter the prevailing trend. That's their main game. And just like anything else in trading, with zones, the higher the time frame, the better chance that the zone is going to work out for you. So if you're down here on the 1 minute time frame and you're looking for engulfing candles and you're looking at zones, you'll notice that the price action is too weak because there's not enough data. Each candle is just 1 minute's worth of data, and that's not a great way to go about finding the best zones. So in this scenario here, just to give you an example, we'll say that was the candle that got engulfed. Okay, and we'll bring it over like we've been doing. Okay, and that looks like a pretty solid zone. But as you can see, the next time price gets to this zone, it doesn't even do anything. It doesn't even react at all. It just blasts straight past it. So in general, anything you do in trading, whether it's a zone or a pattern or a specific candle you're looking at, the higher the time frame, the more reliable it is. So if you're down here finding zones on the 1 minute, you're liable to get really eaten alive down here. And you can see this zone here is on the weekly. So each one of these bars is an entire week's worth of data. That's why it reacts so cleanly to this zone. And you can see it again over here. I can draw a zone, we'll call it right here. You've got your engulfing candle. You've got a lot of price action right here. So let's draw a zone. And when we pull it over, let's just see if price respects it or not. Okay, so we've pulled it over. And we can see, again, how reliable this is. So it reacted here, here, here. And it did eventually break it. So your zones will get broken at some point. The market can't stay in between 2 points. But once it broke it, it came back and retested it. And when it did retest it, you got a huge buy off of it. And again, we had a massive sell here. This was during the financial crisis. So we had a huge sell here. But again, this zone that was created back in 1998 on the weekly, again respected in 2005, was respected again in 2009, and respected again in 2014. Okay? And then this zone here that had been respected since, let's see, the first time we got this zone was in June of 2001. And you can see all the way over here in April of 2009, it's still getting respected. So the higher the time frame, the more reliable your patterns, your zones, your indicators, the more reliable everything will be. So just remember that the Forex market is massive and only big money can move it. And because of this, it's impossible for them to hide their orders from us. And this is how we look for huge orders with engulfing candles. And we draw our zone around the candle that got engulfed. And once we mark it, we wait for price to get there, and then we wait again for a reversal pattern. So we use zones, and it's important, like I said, not to react right when price gets to the zone. We're just going to use patience, and this is essentially how we use our zones.